All right, well, welcome to tonight's webinar, How to Manage Your Stock Portfolio in 10 Minutes a Day. For those who I have not met in the past, my name is Tyler Ballhorn. I am the founder of Stockscores.com. I trade the market every day, write newsletters, books about the market, that sort of thing. Tonight we're going to focus on investing. Now, I did a webinar last week on Thursday that was more focused on day trading, and there is a video available if you want to watch that particular webinar. If you go to my YouTube channel, you can find that one. I believe it was called, I don't remember, How to Make a Living Day Trading or something like that. Anyway, tonight we're more focused on the investor, the longer term trader, someone who's going to hold stocks for months or perhaps even years. And the process I'm going to show you tonight shouldn't take you more than 10 minutes once you've practiced. Now, I say once you've practiced because it's a skill like anything. It takes some time to learn. But when I write my newsletters, many of you read my weekend newsletter, and those picks in that newsletter, which tend to do quite well, I do those picks in probably about 10 minutes on the weekend. So once a week, 10 minutes to pick some good longer-term trades. Now, you can run that same process daily if you want to find sort of a medium-term trade, something measured in weeks or months. But anyway, tonight I'll show you all that. So the itinerary is, to begin, why charts? Why do I use charts to make my investment decisions? And then I'm going to teach you a little bit about how to read charts. So we're going to start with the building blocks of chart patterns, something called inflection points. I will then teach you the 6 elements of chart patterns. These are the main analytical tools that I use, whether I'm looking for a longer term trade or whether I'm day trading. It really comes down to 6 simple things that I will teach you tonight. We're going to put them all together, look at doing some market scanning to sort of go over the entry decision, how we find the stocks to buy or to short, I suppose. And then we'll talk a little bit about the exit decision and how much time that takes. I will show you the Stockscores Education Center, which is an online tool for learning my approach to the market. I will talk for a couple of minutes about my training that is coming up in June, starting June 3rd. And then I'll take a few of your stock questions. So if you have a stock that you want me to analyze for you, I'm happy to do that. I won't do too many, but I'll try to get as many in as I can. And then we will end, and I'll be recording this, so if you want to watch it again later, you'll be able to do that. All right, so let's talk first about why charts. First of all, what is a stock chart? Well, it's a visual price history of how price changes over time, and it goes from left to right with time, and this axis is money. So the price might be $10 or $5, and you can see that this stock kind of winds its way up towards $10 over time. This can be something that lasts years. It can be something that lasts months, weeks, or even just minutes. That's called the time frame of the chart. We'll look at a few different time frames tonight. When you look at a stock chart, what you're looking at is the history of all the trades that have happened second by second, day by day, week by week, month by month, year by year, all over time, and they really reflect the opinion of millions of people, not just one person. When you see someone on television talking about a stock or read about a stock in the newspaper, you're probably seeing the opinion of that stock by one person. Maybe that person's deemed to be an expert, but it's still just one person's opinion. When you look at the history of how a stock trades, you're looking at the combined opinion of millions of people. And my primary reason for using charts is that I would rather trust millions of people than just one person. And that one person includes myself. I don't believe that I am smarter than millions of people. Or in an individual stock, maybe it's only hundreds or thousands of people trading that stock. But I just don't think I'm more knowledgeable or smarter than a large group. And so what I've chosen to do, and this began over 20 years ago when I started trading, was to let the opinion of all these people tell me what to do. And I do that by reading stock charts. Now, some people call that technical analysis. I don't consider myself a normal technical analyst. You will never hear me talk about indicators like MACD or stochastics or different oscillators. Not to say that they aren't useful, but that's not my approach. I keep things very simple. I have an approach that is very quick, and it is based on 27 years of trading. And so what I'm going to teach you tonight is kind of the entry level of that. My goal ultimately is to give you an edge to beat the market. There are characteristics that show up in stock charts that help us beat the market, because most stocks that outperform the overall market share the same characteristics early in their trend. I'll show you a couple of examples. So here are one of two stocks that I'm going to kind of focus on as I go through the education portion of tonight. This is a company listed on the Toronto Exchange. We know that because there is a T dot at the start of the symbol. So anytime it's a Toronto listed stock on Stockscores, it will be T dot and then the symbol. If it's on the Venture Exchange, it'll be V dot and then the symbol. All right, that's the naming convention that we have on Stockscores. Now, this particular chart is a 3-year weekly chart. All right, so each one of these, what we call candles, represent a week of trading. The particular week that I have circled there opened at about $3.60 and closed at about $4.10. I know that it closed above where it opened because the candle is green. If it closes below where it opened, that means the candle will be red. So this particular one opened here at 350 and closed the week down around 310. That's what those colors mean. Now, the colors in the volume don't always coincide with the colors here, and the reason is the colors for the volume are based on whether this market was up or down for the week. So in this particular week, it is red because it was lower than the previous week. The previous week it closed there, and the next week it closed there. And so the result is we get a red volume bar. This is volume right here. It shows how many shares were traded for that particular week. If we were looking at a daily chart, it would be how many shares had traded for that particular day, and each one of these bars would be representing a day of trading. All right, so the last piece we have here are the Stockscores indicators, which are down at the bottom. We use the Stockscores for longer term trading, the kind of thing I'll talk about tonight. Basic rules is we want the green line, which is the sentiment stock score. So you can see the green line right there. We want that to be above 60. And we want the blue line to jump up above 80. It doesn't have to stay above 80, but we like it to jump up above 80. And that may signal a entry point for that stock. And we combine the Stockscores indicators with good chart patterns to tell us when is a good time to buy the stock. In this particular case, we had sentiment score above 60, signal score above 80, and a predictive chart pattern. My job tonight is to teach you a little bit about chart patterns and why you would know that that is a good buying opportunity. Now we can take the chart and look at it on a much shorter time frame. This is a 15-day, 30-minute chart. And each day is found there. Okay, so these are all individual days. Each bar or each candle represents 30 minutes of trading, and we have here 15 days of trading history. This is a company called BlackBerry, which is listed on both the Toronto and NASDAQ stock markets. But we know that this listing is the NASDAQ listing because there is no T dot in front of the symbol. There's just BBRY. Okay, so just pause for a moment, make sure we're all good on that. And I will take questions more toward the end there. So if you have questions, you can save them up. All right, so that is a shorter term chart. Same principles. We've got price history from left to right over time and price on the vertical axis. And in this case, you can see that BlackBerry moved from $9.40 about a week ago to $11.20 as of the time that I created this chart, which was partway through the trading day today. I built this presentation today. All right, that's a nice gain though on a stock. If you can buy a stock even at $9.70 and today you're sitting at over $11, you're up better than 20% in 1, 2, 3, 4, 5, 6 days. We're on our 7th day now. All right. Okay, moving along. Now I'm going to teach you how to read charts. And the building block of chart analysis is something called an inflection point. And we'll touch on this idea today. I expand on this idea in the foundation area of the Stockscores Education Center, which I will show you in a little while. The inflection points are basically these points here where we have highs and lows on the chart. And inflection points are where the stock stops going down and starts going up. Stops going up and starts going down. So they're the point where price changes direction. It's really a point where the control of the market changes. Here the buyers are in control. We know that because price is going up. The buyers lose control here. The stock price starts going down and now the sellers are in control. The sellers can only push it down to that level and then the buyers take back control and price goes up. You get the idea. Sellers in control, sellers, buyers. We want to know who's in control of the market because we want to invest with the group that is in control. And the best times to make a trade are when control is changing. So buying here, selling here. Buying here, selling here. Now we'd love to say, well, we want to sell at the highs and buys at the lows, but that's not realistic. And in fact, if you try to do that, you will be a losing investor. You have to wait for the initial sign that the trend is turning. Talk a little bit more about that when we get into the 6 elements of chart patterns. So if you can see peaks and valleys on a chart, you can see inflection points. So looking at this chart, ponder that on your own for a moment and look for peaks and valleys. Peak here, and another one here, and another one there. Little one there, one there, one there. Those are the pointy tops on this chart. Probably put one there as well. And then we have the bottoms, the valleys, something like that. I could draw more. I could be a little bit less fussy about what constitutes a pointy bit. But hopefully you get the idea. These are the highs and lows on the chart. And they are the inflection points. Now, why are inflection points important? Because we're going to start to draw lines across them to define things like trend and price patterns, which, before we get into the 6 elements of chart patterns, let's do that same exercise on this 15-day, 30-minute chart, just looking for peaks and valleys. Okay, then connect the dots. And now you can define trend lines, lines of resistance, lines of support, all the things we're going to talk about next, the 6 elements of chart patterns. Now, I trade every day. I typically in a day will do 10 to 20 trades per day. And my trades are based on nothing more than these 6 things. I don't do anything else. And I've been trading for 27 years, and for about 22, 23 years, I have based almost every trade on these 6 things. Support, resistance, optimism, pessimism, price volatility, and abnormal activity. Let me show you what those are. First, support and resistance. If you look for inflection point highs, draw a line across them, you have resistance. It is a ceiling price, an upper limit on what investors are willing to pay for the stock. It's where the buyers lost control and the sellers took control. Support is the opposite. It's a lower boundary of what investors think the stock is worth. It's the valley price level. So there's support. There's the support level. There's one. There's one. It's the point where the buyers took control from the sellers. Okay, now at this point we're keeping things pretty simple. I have a video that's about an hour long that teaches these things, but I'm giving you the highlights for now. Now, optimism and pessimism. Optimism occurs when the bottoms are rising from left to right. So if I can see a situation where the bottoms are rising from left to right, I have optimism. So there's optimism there, there's optimism there. Pessimism occurs when the tops are falling from left to right. So there's pessimism there, little brief period of pessimism there. And why is that important? Because we always want to trade with the group that is in control of the market. And the best times to trade are when control changes. So there was a change of control, there was a change of control, there was a change of control, and back here there was a change of control, although it's hard to tell because the scale got so squished down by the fact that this stock has gone from 50 cents to $7 in the last 2 years. If we take those same concepts over to the shorter term time frame, we've got support, resistance, optimism, pessimism. Now I want to talk about price volatility and abnormal activity. Price volatility is how much is price changing over time. Here, there is a lot of price change. We've gone from this level to this level in a relatively short period of time, relative to this chart anyway. Whereas here, there is very little price volatility. Here, there is very little price volatility. Price is not changing a lot at that moment. Now, what we want to do is find situations where price volatility is diminishing because it helps us see good buying opportunities. So if I can draw a line across the tops and I can draw a line across the bottoms, and if those lines are converging toward one another, then I have diminishing volatility. So the best ones are here, low volatility, here, low volatility, here, and here. This one's not that great. Now, why is that important? Well, the stock market is a place where people argue about what a company is worth. Each and every day, investors are in the market arguing about what a company is worth. If there is a lot of volatility, then the argument is a big question mark. Investors don't agree about what the company is worth. However, if you have a period when there is very low volatility, like there, then you have agreement. Buyers and sellers have come to some consensus about what the company is worth. At this particular point right here, investors agree this stock is worth about 50, 60 cents a share. Here they're not sure. Over those 4 or 5 weeks, the stock moves from 75 cents to $1.50. There's a lot of price movement there, and therefore you do not have some consensus about what the company is worth. So we want to look for situations where investors agree about what the stock is worth, and then breaks from that, which implies some new information. If everyone agrees that a stock is worth 50 to 60 cents, and then one day the stock jumps to 75 cents, it's probably because some investors have some new information that justifies paying a higher price. Now, I'll give you a little secret about the stock market. It is not fair. The stock market is not fair. Some people get better information than others. I want you to trade with those people that have better information. However, since you and I and most people don't get better information, we have to follow those who do. And we do that by looking for breaks from good chart patterns. And the key thing, the secret, the number one most important thing is abnormal activity. When you see a stock, or anything really, a commodity, a real estate market, whatever, make an abnormal price gain with strong volume after a period of low price volatility, you've got a situation where investors have found a reason to pay more, they're excited, and they're voting with their dollars. So let's go back to this point that we highlighted earlier. Here we have a price gain which stands out relative to the weeks and months prior. The volume at that point was higher than any other week on that chart. And that is why the sentiment stock score was above 60 and the signal line jumped up above 80, because that's what those indicators look for. Now, I don't know anything about this stock. What I know is that the people who know the most were buying that stock aggressively there because they knew something. And look what happened in the weeks that followed. As more people learned about that information, the stock went into a market-beating upward trend, where it went from 75 cents a share to $2.50 a share in 6 months. In 6 months, that stock gained about 300%. And you can find situations like that without ever knowing what these companies do, using the simple principle that you will follow the smart money. Now we can do that on a shorter term time frame as well. BlackBerry has been probably the hottest Canadian stock in the last week or two, and it all started with abnormal price movement from low volatility, from optimism, through resistance, leading it into a market-beating upward trend. So we want to consider stocks when they are breaking through resistance from low price volatility, from optimism, with abnormal activity. Now this is a simplification. I've told you enough to give you a basic concept, but I spend probably 3 hours teaching people how all of these things come together and to use them properly. But let's just look at an example of where those things came together. Here, that happened. Here we had a break of resistance with some abnormal action. Here we had a break of resistance with some abnormal action. Volume wasn't super strong there. Here we had a break through resistance. This is a pattern called an ascending triangle. And again, volume was strong, signal above 60, sentiment above 80. There. Stock scores weren't quite great there, but we have another strategy where we have a lower standard for the stock score, something called a breaking downtrend strategy. And there again, 60, 80. Moving over to the shorter term example on BlackBerry, there was resistance. There was our abnormal action, breaking through resistance from low volatility. This is a pattern called a rectangle consolidation. There are about a dozen different patterns I can teach you to see. This one's called a rectangle consolidation. This one is called a falling wedge. And these patterns have predictive value because they represent what investors are doing with their money. Not what they're saying, not what they're talking about, but the ultimate arbiter of truth, what they are doing with their money. People lie, but they don't like to lose in the market, so they will tell you their honest opinion with what they do in the market. And in aggregate, in all of those people trading the market together, that shows up in price and volume action. Again, I don't know anything about what these companies do. I mean, I know BlackBerry used to make handsets. I thought that they were almost out of business. Apparently not, because look what their stock has done in the last week, 2 weeks. 940 to 1140 And I still don't know what it's done, and I've traded it more than once this past week. Now, when you're doing this, it's important to do time frame confirmation. If you are a medium-term trader, you may be getting your entry signal from the daily chart, but you should look for confirmation on the weekly chart. When I'm day trading, I get my entry signal from the 2-minute chart, but I get confirmation from the 13-minute chart. So time frame confirmation is looking at what other participants in the market are doing and trying to make sure that you're all on the same team. If the weekly chart says sell and the daily chart says buy, I don't trade. If they're both in agreement, then I might make that trade. And same thing on a very short-term basis, day trading, which I talked about on Thursday. There's a video again for those who came late tonight. There's a video on day trading on my YouTube channel. I'll have the address up for you later. Tonight we're going to focus on investing. So the entry decision. How do you find these things? We're going to do our market scans each day or each week depending on the strategy, inspect the charts, identify opportunities, calculate the risk of the trade, which then determines our position size, and then execute the trade. So let's jump over to Stockscores so I can show you how that works. I'm going to go through this fairly quickly. Go to the market scan tool, and we have preset scans here for people that are members of Stockscores. So if you read my weekly newsletter, the scan that I do for that usually is the Stockscores Simple Weekly, both for Canada and the US. On a nightly basis, I like to do the Stockscores Simple Canada or Simple US or the Abnormal Break scan. So let's do the Stockscores Simple US. Run the report. 65 stocks to look at. I then view these charts. I can view them in a slideshow or a gallery. Slideshow gives you each chart one at a time, and I'm looking for patterns. Now I've touched on what we want to look for. It takes some practice. Like I said, we spent about 3 hours studying the theory for how to read these charts. But let me just go through a few of these and see if there's anything I like. This one was good about 2 weeks ago, right here, Zynga. And if you go back and read my weekly newsletter around that time, you will see that I featured Zynga as my stock of the week, if you will, back then. It's up about 10% since then. So as I go through these charts, I'm looking for breaks from predictive chart patterns. I'm looking for breaks to resistance from low volatility with optimism with abnormal activity. Now I can go through these one at a time like this. But once you get good at it, you can speed up the process by using the gallery viewer. So I'm going to click here on gallery. And now I can go through them 10 at a time, so I can go through the charts that much more quickly. So when I say that you can do this research in 10 minutes a day or 10 minutes a week, it takes some practice, but once you learn how to read charts, you can literally go through them as fast as I am now. And that's probably frustrating you because I'm going through them so fast. But I'm trying to find something good here without taking all of your time tonight because I know you all have other things to do. So let me just see if there's anything I like. Blackstone looks pretty good. So I can click on this and make the Blackstone chart bigger. There you can see resistance at about $31.50, sideways trading, so we have low volatility. Yesterday it gapped up with strong volume, abnormal price action. See the Stockscores jumped up above 80 on the blue line, above 60 on the green line. And if you go read my weekend newsletter, for those of you that don't know where it is, go to Products, Newsletters, read most recent weekend newsletter, and you will see right there my feature on Blackstone. Okay, I did this market scan yesterday and found it. I actually bought Blackstone myself yesterday, but more as a day trade. All right. So what I like about this is it's breaking through resistance from a rising bottom, which is a sign of optimism. After breaking the downward trend line late last year, it is now building optimism. Control of the market has changed from the sellers to the buyers. This is a good longer term setup. So if you have a time horizon for your investments of months or years, this would be the kind of trade you'd want. Now you may say, well, I want things a little bit quicker than that. Well, then you use a different market scan. So I go into the market scan and maybe I run the abnormal breaks US scan or abnormal breaks Canada. I did Canada before. I don't think there was too many candidates tonight. Yeah, BlackBerry's on there. Let's try the US market just so we can get a few more candidates. It was a Canadian holiday, of course, yesterday, so the markets in Canada were pretty slow today. So we'll run the abnormal breaks US, run the report. There were 15 stocks that met the requirements of that strategy. I can go through them. Ericsson's not bad. This one is not bad. It's not great. I would give it a 6 out of 10. Schnitzer Steel, SCHN. I think we can do better than that. I would give this one a 7 out of 10. Qterra. Pretty good, not outstanding. Go to the next page. So I can teach anyone how to do this. It takes some practice, but it's pretty simple conceptually anyway. All right. So that's the entry decision. It will take you, when you're new, when you're learning, probably take you 30 minutes to do it. When you're practiced after a couple of months, you can do this in 10 minutes. Now, if you want to do this just once a week, then you run a different strategy. You go into your scan and you do the Stockscores Simple Weekly for the Canada or the US. And again, if you look at my newsletter picks, and that free newsletter that I do every weekend, most of my picks are using that strategy. Now, the exit decision takes even less time because we exit stocks based on whether they are breaking support, and we define support on a weekly or daily basis depending upon the strategy we are doing. So if you are in BlackBerry, you would define support on this one. Because it's moving up so quickly, I would probably define support at $10 or aggressively at $11 because this trend is going parabolic. And if it were to close below $11, I would sell. So each day or each week, you know what your price floor is because you're going to apply my methodology that I'll teach you. And you say, okay, if the stock closes, if BlackBerry closes below 11 tomorrow, I'm going to sell it the following day. That decision is something that takes you a minute or two per day or per week. What you should do is build a watch list of your positions. So you go into the watch list creator and you create a new watch list. You can call this one My Holdings and type in a few symbols and submit. Now, on a daily basis, all you have to do is go into the slideshow chart viewer, go to view my watch list and pick up the holdings list. And now I can quickly go through those charts to see if they are breaking down through support and require my attention to sell them. If they're in an upward trend, let them go. Why sell a winner? Don't sell winners. Sell losers. Sell stocks that are having the control of the market change direction. Okay, so that's your exit decision. Inspect the charts of your holdings each day or week, depending on the strategy. Look for the exit rules to be satisfied and then execute the trade. Now, I'm going to, in a moment, take some of your stock questions. So if you would like me to look at a stock, I probably won't get to all of them. We have a lot of people in here, but post the symbol, and I will do my best to analyze the charts using the principles we've talked about tonight. What I want to move on to now are the little bit of information on the Stockscores Education Center. If we go back into the Stockscores website and go to Education, you can see here that we have all these modules. So we put all of my lessons online. There are written documents, the written lesson. So here's the 6 elements of chart patterns that we've talked about tonight. There's a long lesson about that. And then we have the video that explains that particular lesson. You can watch this on virtually any device, an iPad, a phone, well, you have a smartphone, and an internet connection, a computer. Just click on play, and you get some snappy music. This is a 30-minute video that explains the concepts that we touched on tonight, the 6 elements of chart patterns. To make sure that you learn it well, I have an assignment for you so that you can practice. And then there is a little multiple choice test so that you can make sure you understand the concepts. Look at me, I got 100% on this. It's like I wrote the test or something. Now the way it works is we have getting started, that's free stuff. Foundation is the things that you need to learn before you can understand my strategies. I can teach you this in about 3 hours. You always have the videos here to go back to, but on June 3rd I'm going to do a 3-hour session online where I will go through the important areas of this material and teach it to you. And then you have to practice a little bit. Once you do that, then you're ready to start applying my strategies. So if you want to do 10 minutes a week, you're going to focus on the Stockscores Simple Weekly, and it's all explained there in that lesson. That's the investor area, which is kind of what we're focusing on tonight, but some of you may have an interest in shorter term trading. And so we also have the active trader strategies, swing strategies, day trading strategies, how to use TradeStation. What you choose to do depends on how much time you have, your level of interest in trading, whether you want to sit in front of the screen a lot or a little. If you're retired and you want to play golf every day, you just want to do a little bit of work to manage your portfolio on the weekends, let's say, then you should do the investor area. If you want to trade actively, most of our work is done in the first 90 minutes and then about the last 10 minutes of the day. So you don't have to be glued to your screen all day. I would say 80% of the entry and entry signals come in the first 90 minutes, maybe 2 hours, depending on the day. And then you kind of wait until the end of the day and exit your positions at the close. So that is the Stockscores Education Center. The way my trader training works is you read my basic book called The Mindless Investor. So if you buy one of my courses, I send you that book. Many of you may have already read this book. It gives you kind of a basic overview of my approach. You then study the foundation. As I said, I can teach you all of that in about 3 hours. But there's also, I would say, 6 hours of videos online that you can review on your own. Good fallback. And then you specialize in your strategies, depending on the type of trader you want to be. So we have the investor strategies and the active trader strategies. And from that, you do your market scans or using the processes that I talked about on Thursday last week when we were doing the day trading video. Each foundation module has a written component and a video, as well as an assignment and a test. And then the strategy areas just have a written component and a video. The assignment is really practicing it in the market. The test is the market's going to give you a mark based on your success rate in trading. So as I said, I'm going to complement all of that live training that's available at stockscores.com with some live training in June. We're going to do 2 things. Actually, do 3 things. There's going to be the foundation course, which we're going to review on a Saturday, June 3rd. So Saturday, June 3rd, we're going to do the foundation. As I said, it takes about 3 hours. And we're going to go through all of the important concepts that you use for analysis. Then we're going to practice applying the strategies. So we're going to do some live nightly scanning, just like we did tonight where I was doing market scans. I was doing them really fast tonight. These we're going to do a lot slower. We're going to spend about an hour doing the market scans. So what would normally take me 10 minutes, we're going to spend an hour doing. We're going to do that for 4 nights. Just going to practice picking stocks, going through risk management, sizing positions, finding the stocks that are worth buying. Maybe we'll do some short selling as well. That's for the investor people. So if you take the investor course, that's what we're going to do, as well as this. If you want to be a day trader, you can sign up for the active trader course, and we're also going to do some live trading for the month of June. So every day in June, I don't think there's any holidays, Monday to Friday, for the first 60 to 90 minutes, we're going to do building of our watch list. In the first week, I'm going to really do that process slowly so I can teach you how to do it. And each day for that first week, there will be a video. of me building the watch list and identifying trades. For the remainder of the day, so until the close, my algorithm and my computer is going to give you real-time trading alerts as they happen. Now, it used to be me doing this. I used to say, okay, there's a buy signal on BlackBerry right now, but I've actually programmed my computers to do that work for me. So it basically takes the rules of my strategy, computerize them, and does it automatically. Now, I did that because a computer is always going to be faster than a human. And so, although I'm pretty good at this and I've done it a long time, I'm still not as fast as a computer. And the computer does it perfectly, doesn't make mistakes, it just follows the rules. I am a rules-based trader. I don't try to think, I don't try to be smart, I don't let my emotion get involved, I just follow the rules. And that's what we're going to really showcase during those active trader sessions. Cost of the courses: investor course, $2,495 Canadian. Active trader course, $3,495 Canadian. If you do the investor and you want to upgrade to the active trader, you pay the difference plus $250, so you can upgrade for $1,250 at any time in the future. Some of you may have already done the investor course and want to upgrade to the active trader. You just simply log into Stockscores, go into the Education Center, and go down to where this is, and if it hasn't been purchased yet, there will be a button here where you can upgrade. You just walk through the steps to do that upgrade. It's very simple. Whether you're buying the course for the first time or upgrading, you are going to get the June trading for free, provided you purchase before May 30th. Because I got to build my presentations and lists of people that are participating, and I can't do that if you're signing up, the day before the class starts. So register for the investor or active trader course before Tuesday, May 30th at 11 p.m. Pacific time and receive all of that live training. So the foundation course on Saturday, June 3rd from 9 till 12 Pacific time, as well as the appropriate application series. So if you do the investor course, you get the investor market scanning. If you do the active trader course, you get everything. You get the active live trading for the whole month of June, plus you get the investor, plus you get the foundation live. If you do the investor, you get the investor plus the foundation live. You get that for free prior to May 30th. After May 30th, it's $495. If you have taken my course in the past and you want to redo it, need a refresher, then you can do that. I will be sending out a link. You can repeat all of this live training for $195. And as I said, if you've already taken my course in the past, you will get an email soon with a link to purchase that live training. What I'm going to do now is just post a little poll so that anyone who wants an email from me with more detail on the course can just say yes, and I will send you an email soon. And I just want to say one of the reasons I do this is I don't like, oh shoot, let me just fix something here. Okay. I made a mistake when I created this poll. So let me just fix it. I don't like hard sales or pushing people on things that they don't want. So if you don't want an email from me, just say no to this question and I won't send you one. I will send everyone that's registered a link to the video. But like I said, if you don't want to receive an email, then you don't need to. So I am going to now post this poll because I had to fix something there. So you should see this come up in just a moment. So you can answer that. Yes for either course. No thanks if you would rather not receive the email. And once we've had that up for a minute or so, I will take your stock questions, try to give you some analysis on those. I think I closed my browser when you're down, so I've got to open that again. Just do that while you guys are answering the question. Okay, I'll leave that poll up for another 10 seconds and then we'll continue on with looking at some stocks. Now, as I said, there's a lot of people here, so I won't be able to answer every question, but I'll try to do a few just so you get a sense of how I analyze charts and really how quickly you can do it. It's not that hard. So you should see my Stockscores screen up again. And I just got to read the questions here. Northern Dynasty Minerals. So let's take a look at T.NDM. Oops. Trades in the US and Canada. I think it's NDM in Canada and something else in the US. Okay, so this is a 240-day chart, basically 8 months. So the bus left the station on this one in November. There was abnormal price action, abnormal volume back then. Went into a nice upward trend, broke the upward trend middle of February. That was a signal to sell. That's a double top pattern, break of an upward trend line, pretty strong signal to sell. We had an okay re-entry signal right here. This is a pattern I call a bottom fishing pattern. And it's done all right. It's not, it's kind of sideways. It went up a little bit there, but if I own this stock, which I do not, but if I owned it, I would hold it because it is at the upward trend line where it should bounce. However, if it breaks this upward trend line, so let's say it moves down through $2, I'd be a little worried. I'd probably jump ship on it. I don't see a reason to buy it here. I think it's an okay hold. And again, if it closes through $2, I would run away. FedEx is the next one I'm going to take a look at. So FedEx is in a sideways trading range, has been that way for 5 months. So it's in a sideways price pattern. It needs to break out of this pattern before I'd want to consider it. It's, I call these parking lots. Your money's not doing anything for you. There's probably a bit of a yield on this. Yeah, it pays a 0.8% yield, not considerable. I see no reason to buy it. Not really any reason to sell it either, except that it's kind of dead money. Now we can take a longer term view and look at the 3-year weekly chart. And there I see, okay, it looks a little better. It has some pretty strong momentum over the last year and a half. It's taking a pause now. But again, it's spent 6 months going sideways. There's probably better places for your capital. If it can break out, if it can move up through $197, $200, I like it a lot more. So it's a stock to keep an eye on, but I wouldn't do anything on it right now. All right, another one, T.IVN. So this one has rising bottoms. You can see the bottoms are rising from left to right. We talked about that as something important. That means the buyers are in control. It's just broken a pullback. It did that 4 or 5 days ago, so that's a positive sign. Should lead to continued upside. It's more of a reason to continue to hold than it would be a reason to buy. To me, there was a great buying opportunity right here back in the second week of December when it had this abnormal price action with abnormal volume breaking from sideways trading. That was our formula that we talked about tonight. If you bought then and you still hold it, I would hold it. But I would not initiate a position here because I don't feel like it's got a great reward for risk trade-off. Take a look at TET. Let's take a look at that one on Toronto. I'll do 2 or 3 more and then we'll wrap it up. I know some of you want to watch this hockey game that's on. Of course, most people that watch my webinars are in Canada, although we have a few people here from other places in the world. I don't care a lot about hockey like we do. So TET, downward trend. Until that downward trend is broken, I would stay out of it. I see no reason to own it. And it is stabilizing. It's made a double bottom. You can see it bounced off 440 twice. It needs to break the downward trend line. So if you drew a line across these tops right here, that line kind of comes down into that 570, 580 zone. If it can break up through that, then it's better, but I don't know if that would necessarily make it a buy. It's just less of a sell, I suppose. Okay, we'll do shop, which is on Toronto, T.SHOP. So great stock if you own it. I would not initiate a position here. I think it's too late and too risky. The trend has gone parabolic, which is one of the signs that it's getting near a topping out point. However, the upward trend line has not been broken yet, so it still remains a hold, but I would definitely dance close to the exit door. Now, when we talk about our signals, we had abnormal price action here with abnormal volume, breaking through resistance at $60. That was the buy point. You may be wondering why no stock scores, Tyler. The reason is we need 200 days of trading data to calculate the stock scores, and this stock has not traded that long. So based solely on the pattern, that was our buy point. There was a flag break here. I have a strategy called an intraday pullback or a pullback play where I would maybe consider adding to that position there, also here, but I would not be looking to buy it here. In fact, I would be looking to sell it if it can break that upward trend line. It is emotional. The buyers have all been rushing in to own this. Doesn't mean it can't be more emotional. It could still go to 150, so I would hold it, but I would say that if it breaks down below this, let's call it 110, I would definitely want to be out of the trade. All right, I'm going to do one more. Let's do Baytex, the oil and gas stock. T.BTE is the symbol. And I apologize if I didn't get to your stock question. There's just so many I had to sort of randomly pick a few. So Baytex, downward trend line is almost broken. You could say it was broken there, but not with much enthusiasm to break that downward trend line. It's trying to build a rising bottom. Oil prices have improved the last couple of weeks, so that helps this, but it's still an ugly chart in general. If it can have an abnormal day to the upside, break to the upside, it could be good. And a stock like this can move very quickly, so definitely a stock you want to watch. But it needs the abnormal action. You want to see the enthusiasm among the buyers and sellers. I'm going to take a longer term view of this, and you can see just how ugly it is. It had a real sharp downward trend like most energy stocks, broke the downward trend line there, had a decent little rally. I actually traded it back then. Doesn't look like much, but that was a 50% rally, almost a 70% rally right there from the entry point. But since that time, it's become a parking lot, and it's a bit of a holding stock, not a holding stock. It's in a holding pattern. So I'm not too enthusiastic about buying it. If you own it, now you're probably already suffering. It might turn around here, so you might want to stick with it for a little bit longer. But I don't see considerable potential in it right now. You may not like what I have to say, but I always try to be honest. It's not my opinion. It's the market's opinion. I've just learned how to read the market's opinion, and the market is not too enthusiastic about most energy names right now. All right, well, I am going to wrap it up. If I missed any questions you had about the course or that sort of thing, I welcome you to email me that. I'm going to just jump back into the presentation here and show you my email address. It's right there. So there's my personal email address. It's only answered by me. I don't have staff to do that. So keep your email questions short so I don't have a long email to read, but I'm happy to answer your questions. If you would like to register for the class prior to May 30th and take advantage of that offer we have, there is the page to go to, and I will email that out to anyone who said they were interested in the course as well. You can go to that page. On that page, there's not only the links to register, but there's also the links to some videos. So if you also want to get there from the homepage, just click on this link right here, and it will take you to the page. It's got an overview of the Stockscores Education Center. It's got a picture of me in a snazzy suit. It has videos on the Foundation, Investor, and Active Trader courses, and it has the links to purchase. Now, I've already owned these things, so it doesn't show me the link, but you'll see those links there. And again, if you purchase from this page, you will get that training in May for free. If you have any questions, please email me at that address. I will be happy to answer. Another thing you hopefully will want to do is follow me on Twitter. I put out little comments on Twitter, and make sure you subscribe to my YouTube channel. We've got over 3,000 subscribers on my YouTube channel. I upload at least one video a week, sometimes more, and that's free analysis, free commentary on the market. And if you are subscribed to the channel, then you will get an alert when I have updated or uploaded a new video. So hopefully you will subscribe to the channel. I like to have lots of subscribers. It makes me feel important. All right, I'm going to wrap it up there. I want to thank you all for attending this evening, and hopefully we'll see you again soon. Have a great experience with the market and trade well.